How's it going, guys? We're going to take a quick look at the charts again. And there's a new week, so there's a few things that we need to note. And let's just go over them real quick. All right, so we have FOMC minutes on Wednesday, and then I think we have GDP data on Thursday or something. I can't remember exactly. The important part is that normally we don't really see a lot of volatility for the FOMC meeting end of the month. Usually it's just a recap of what they already discussed, and most of the time the policy is in the Federal Reserve are pretty straightforward, and there are usually not any surprises. Now we're having two things here. One is that the market for at least for S&P 500 was kind of looking bad a few weeks back, right? And they were talking about rate cuts. Now the market is going back up. So they might not be as afraid of recession as they were to begin with when they had the issue with liquidity when it came to the carry trade, right? If you remember the big dump, right? So it will be interesting to see how they will discuss the rate cuts, how many, and if they actually will do it, right? So, they were pricing in one rate cut and they were pricing in two rate cuts. Now they might not price in rate cuts at all, right? So we will see how that unfolds. So I think the discussion inside the FOMC that they're going to release on Wednesday is going to be interesting, okay? And the next is GDP data, of course, always important. Now, if you look at the weekly candles here, so we're having this is the third weekly candle. Volatility extremely compressed. And if you look at previous price history, you can look at these ones, right? You're having these, all these candles as well, right? So usually after price compression, we always see a lot of price movement or a lot of volatility always comes out of these sort of events, okay? So the low there and the high are going to be important, so I think at this point either we're going to squeeze towards these previous lows, or else we will just sort of reclaim the bodies there and really try to send it, okay? So I think it's too early to send. If it would have gone up, I think we should have already been moving upwards. When it comes to the daily chart, it's quite different and than the weekly. So on the weekly, these are just weeks, right? So on the weekly, clearly these are just weeks, okay? And then below it is just weeks as well, right? So we're having just a lot of weeks on the weekly. Well, on the daily, we actually have a lot of pricey information. So the candles here, as you can see, is that if you're holding a bow on the daily, at least on this and the next one, so just going to point this out for you guys. So I think this daily is going to be important. And then, of course, the other one. So we're going to take this out to the weekly just so I want you to see. So this is sort of the key levels that holds liquidity in terms of, or holds supply, right? So if you reclaim those levels, they're going to be important. You can see that these are sort of the wicks here inside the wicks on the weekly, right? So if you hold bullish PA inside these levels, probably we're going to move much higher at that point, maybe some more sideways, but at that point I would be looking for 70K to get hit, right? So just to keep it very simple and give sort of explanation, because sometimes, price action can be a bit difficult. If you hold above these levels, I'll be looking for price to take out the liquidity sitting at the 70K, right? And the same goes for the other side. As long as you hold below sort of these levels and fail the market structure, I'm looking for price to sweep into liquidity sitting around 50K. Okay, so that's sort of the two main scenarios that we are watching to trade. Okay, so let's go out and look some of slightly on these lower time frames. So when it comes to the signals, there are no relevant signals at all on any time frames, right? It's just MACDs here, either having a bullish or a bearish cross, but that's really not relevant. Okay, so the trade I'm currently in here, you can see we actually had a small buy signal. Now it's sort of a mix because we didn't have the Bollinger expansion. We only had a PA reversal with some oversold RSI, which usually are not sort of the strongest buy signal. Okay, but still, normally when we see that, we also always see some kind of a bounce. So let's just zoom out here and just take a quick look. So this is just a very simple chart. What we are seeing here, what I'm trying to portray here, right, is that this green area, I can take the green out as well if you want, right? So the green and the gray areas here are just supply levels. Supply is just a consolidation or a wick sitting at the top before a breakdown. Okay, so it's price going sideways before price sells off. This is just the supply. That's where liquidity is. Okay, it's nothing more fancy than that, right? So that's sort of the top here. People call it order block. You know, it's just a level of a consolidation, and usually that holds liquidity, right? So because you always get the move away from that is sort of the point of interest. Okay, and often act as a magnet to price. Either you rate it, you go shy for it, or you go into the level. You know, it's just a level of liquidity depending on the order book. Now, the other interesting part here that I want to show here is that this is Asia plus London highs and weekly open, and this is from last week. Okay, and my entry is around somewhere within these levels, and then we're having the void. So this is sort of just a very simple trade idea. So now, if you're going to adjust this to this week, we could probably use a bit higher entry. And you can see that we have this particular void there that might get filled. Okay, we're going to go into the session discussion on the next chart, but this would be sort of a simple idea of what we can expect for price, right? So price would then mean that price would then move into these levels and then move lower, right? If we would to hold above these particular levels, right? So if you would break above here and hold above, and then we could potentially see for price to move higher. That would be sort of a price reversal, a structural reversal, where the liquidity then you expand, right? So it means that the liquidity sitting here would turn into the support, right? So instead of seeing sort of sell supply there, right, it will turn into accumulation level. Okay, so we just have to watch how that unfolds. You know, so maybe FOMC tomorrow, or when it is Wednesday, going to bring some more volatility and some more understanding of what we can expect next, right? So from after the FOMC meeting, if you haven't really moved until then, maybe you're going to spike something, right? And usually when we are compressing like this, we also have open interest really elevated as well. All right, so that's sort of the 1 hour, just sort of a simple trade idea. If you go here, we can look at the 30-minute and then just take a look here at the sessions, right? So if we're using the same concept, this is the same chart as I just showed you. We can use this is today Asia, and now we're creating the London box, right? So and from previous levels we can see that we're having highs. This is yesterday's. It's a Sunday, but the markets were open. The gap here is the weekend. So having Asia, London, and New York highs all at the same level. Okay, so up here it will be a lot of liquidity building up. Okay, a lot of liquidity building up, and we also have this Asia high. Okay, and this is the gap, right? So the gap is the run that we had from Asia down until London happened, right? So once we get into the next session, okay, so we had, just explain this, right? So we had opening session, Asia run down, okay, and this is when the London session open, okay, around these levels, and then you're seeing price expand, and we tend to close in the gap. So what we expect is to price to move into or close some of the gap and fill in some of the price levels around these levels, okay? And then we're having the New York session will be the telling factor, all right? So at this point, to break market structure or whatever into New York session, you want to see New York session break here above these levels and hold, right? If New York holds these levels, we will sort of need to adjust the bias, right? So this would then mean that this here turns into sort of the support level or whatever, right? And then you're having the same concept that if we move and close in some of the gap, and we're having New York session open, right? And we move into some of these levels, maybe rate this one or this one, doesn't really matter, or just shy of this, and then starting to break down and break lower. Now, while this purple lines being weekly open, and we're starting to trade below this, right? And we're doing the same concept as previous week. We're expecting price then to sweep towards towards the 50k mark, 55k mark lower. Okay, so we're using these sessions to understand where liquidity is. So liquidity is sitting at the Asia void that's been creating, and also liquidity is sitting at all these session open highs, right? So we're having Asia, London, New York session on a Sunday. And then this is a decent level to expect. This is where liquidity sits. If liquidity gets taken up and we hold above this level, we're probably going to expand most of the week. And on the flip side, the exact opposite. Okay, so it's very straightforward. So that is sort of the idea here when it comes to the short side. These are my screeners, my signal indicators. They are mostly based on longs. They don't give good signals for short for the short side. The short side, I need to sort of use my own normal PA sort of ideas. So until I get some decent buy signals on this one that I can act upon, I will just take it easy and look for just normal PA sells, which is, hold below weekly open and everything else that I explained in this video. Okay, keep it simple, guys. Talk later. Peace out.